Every week that goes by, it seems like there's something that just keeps pushing this market higher. And yet, when you look at economic data and you look at all the other things about this market, it just doesn't make a lot of sense, does it? Welcome to the Best of US Platinum Channel Week in Review, where we go over the happenings of the week, Kerry's take on what's happening in the world, and Mark throws down on some different items about stocks, charts, and what we're doing at the Platinum Channel. So let's get this rolling. So recently, Kerry has contracted COVID, and it's basically, well, it's kicking his butt around a little bit if you ask me. But it didn't stop him from joining the 3 o'clock Kerry's Zoom call to express something that's on his mind and what he thinks is going to change and revolutionize business as we know it.
Let me start by saying that those of you who don't know it, I have COVID. I'm in my 7th day. It's pretty much moved through my body, and right now it's parked in my brain, and it basically is making it difficult for me to concentrate. So I had opted out on our 1 o'clock meeting between Mark and Trent and I, but I wanted to be here for the afternoon or the 3 o'clock, at least for the beginning, because I wanted to share something that I think is immensely important that I came across this week, and I think it's going to change an awful lot and create a better understanding of what artificial intelligence is going to present us in the future. I did a video today on this is crazy. What am I thinking, Trent? On Snowflake. Yeah, and Snowflake is a lesson that we all need to take heed of and understand, because it is going to give us a view into what the next phase of artificial intelligence is going to be. The first phase that we've seen, and we're continuing to see, is that of the build out of the data centers. We saw, and I'm ashamed to say I missed it, that Supermacro Computer was a major provider of the computers that were needed by the data centers, and they openly said we don't have enough. And as a result of that, Jensen went and sold a lot of his GPUs to Dell, and Dell had a record quarter because they had what was needed. I don't think there's any of us understand the magnitude of the expenditure that Apple and Google and Microsoft and Amazon are making to convert these data centers into what is going to be needed to process OpenAI. And this is, until this is done, these are going to run. And recognize that it's not just happening in the United States, it will happen worldwide. And that is the effort that Sam Altman is making to raise money such that countries all over the world can upgrade their data centers to process large language models in their language. And the industry doesn't want to have to wait for everybody to catch up. This has some, and it's not all for I don't believe. And again, let me preface by saying this is my belief and my effort to put things together. It's for the betterment of mankind. If I have all the knowledge of medical history of the English speaking world, I'm way ahead. But if I have it for all languages, I'm even further ahead. And the progress that I can make accordingly is astronomical. So that is why very wealthy people and very wealthy organizations are pooling money right now to accelerate this whole process.
After Snowflake reported earnings, it dropped roughly 18%, opened up the next day down 18% and sustained that. Since then, it's been bouncing up a little bit, but the question is, why did it drop 18%? Why did Snowflake tank? In this next section, Kerry explains why we saw Snowflake drop like it did.
So what happened with Snowflake? Snowflake did their earnings call, and the major point of that earnings call was to pass the baton from Frank Slootman, who 5 years ago founded and put together Snowflake as a software company to help companies manage their data in such a way that their employees could make better use of it to make their companies more efficient and more productive. 8 months ago, they hired a guy by the name of Shahar Ramaswamy. Shahar came from Google. Shahar spent 15 years at Google heading up Google AdWords. He took Google AdWords from a $1.5 billion project to over a $100 billion project. And what he did, if you think about it, is he put the advertising business out of business. He created the ability for Google to know more about you and I than our spouses do, because we do things on the computer that we don't tell our spouses about. It's none of their business or whatever. Google knows more about me than my wife does, and I've been married to her for over 50 years. That is just a fact. So with that fact, they have come to the ability to market to me better than any ad agency could. And they've proven their ability to do that. Well, Shamar pioneered and pushed that. He left Google several years ago and started a company called Neeva, Neeva. 8 months ago, he bought his Snowflake bought his company. What that company is designed to do is to take Snowflake, who has taught companies' employees to use their data better to make their companies more efficient and more profitable. He is now going to take those companies and replace the employees with compute. So that, imagine that I am an insurance company, a very large insurance company, and I have years and years of data. And I have agents who interface with some of the people that I insure, and behind every one of those agents is 50 people who process, organize, and make decisions based on the data that that agent generates within that company. Sometimes they make good decisions, sometimes they don't. Now what's going to happen is Snowflake is going to take their data and remove the 50 people behind them so that better decisions can be made relative to insurance. That is going to happen in virtually every industry. The banking industry, travel industry, entertainment, real estate, manufacturing. All that data that was processed, analyzed, and decisions made by people, those people are going to be eliminated, and those decisions will be made by computers. Now, something that I haven't shared in any of my videos is they also, Snowflake just bought another company. It's called Shamooha, Shamooha, Shamooha. They make clean rooms. Yeah, they make clean rooms. What's a clean room? Well, my thought immediately was some sort of medical or some computer. Let's assume that David here, who's next to me, he owns a big insurance company, and I own a big insurance company. And we both have data, and we operate in different parts of the country, but we do have some crossover. And I have 50 years of data, and he has 50 years of data, and Snowflake comes to us and says, hey, we can improve both of your situations if we merge your data together and analyze it and make decisions based on that. And David says, wait a second, I don't want to merge my data with Kerry's data because he'll steal some of my information. And they say, no, we've got a clean room, where the data can come together and it can learn from each other, but it doesn't steal any of each other's elements. This is something that is owned, as best as I can find, only by a few companies. Amazon owns one, Microsoft, Google, all the big cloud agencies have developed these clean rooms. Why is that? Because they have multitudes of companies and businesses' data. So they had to create this to create some safety and security amongst all the people's data that they have. Snowflake went out and bought a company, so they are the only that I could find independent company now that has that capability. So if that's the case, Kerry, then why did Snowflake's price drop 50% or 20% day before yesterday? Well, again, if you listen to the earnings call, it's kind of evident. Number one is that they revealed that they will be spending $50 million this next quarter with Jensen for GPUs. They said that they will spend another 10 million for additional cost of product that is needed to make what they're trying to do done. And then they are going to increase their commissions to their salespeople by another $30 million. That's an additional $90 million expense that they announced. To put that into perspective, last year they had $2.8 billion worth of revenue. They had $2.99 billion worth of expenses. So they lost somewhere in the neighborhood of $20 million. They're going to spend another 90 million on top of that loss. That's why the earnings, or that's why the shares went down. They also announced that they are going to increase their employee force by roughly 20%. They're hiring an additional 1,000 employees. Why do you think they're doing that? They're hiring engineers to implement this new program to eliminate people from processing data and replacing it with computers.
There's been an enormous amount of anticipation that the Fed will lower interest rates and that they'll do it this quarter or next quarter. And every word that a federal chairman or a Federal Reserve participant says anything about interest rates, everybody gets so hyped up and so pumped. In this next section, Kerry and I discuss why you won't see interest rates drop anytime soon and what interest rates are truly used as by the Federal Reserve.
I did a chart that I've shared with you where I show the history of interest rates going up and down and the inverted yield curve. And I got to thinking about what are the tools that our Treasury and our Fed have to save the economy, because again, that's what they did in the dot-com bubble and the subprime crisis. They come in and they save the economy from its own demise. And the only tools they have are interest rates and printing money. And if you have the potential for armed conflict or cybersecurity attacks or whatever, do you give up your ammunition of the ability to lower interest rates without a real reason, just to stimulate an already stimulated economy? And I don't know. Why would Jerome lower interest rates now and take that tool that he potentially may need sometime in the future out of his armament? Because then the only tool you've got is the Treasury's printing press. So
yeah, I don't think you lower rates just because of what you're saying there.
Yeah.
Because if you drop rates 300 basis points, well, you're now down around 2.25. You have to wait. You have to wait, because that is what has bailed you out the last, 2 or 3 major economic slowdowns, is the ability to lower rates and create liquidity.
Yeah.
So I would be shocked if the Fed lowered rates now in this month or in the coming months. I think they're just waiting because they know we're way over our skis.
Yeah, I think that's evident. So, okay. Well, I'm glad you agree with me. That's one thing you agree with me on.
I agree with you on a lot of stuff.
Every Friday, Mark and I put on the Platinum Swing Trading Call. And typically about 5-10 minutes before the call starts, he and I sort of go back and forth about things. And this week we talked a little bit about the tug-of-war that we're seeing amongst the Magnificent Seven.
Oh, we're up today. We went up. Party like it's 1999. But
Right? Yeah, Nvidia's what I dumped my position in Nvidia. It's at one. It was at 820 last time I looked.
817.51 right now.
Yeah. It's interesting. It's yesterday was a push and pull tug of war with Apple and Nvidia, and then all of a sudden, basically Apple gave in. Nvidia wins, the market goes higher. I
Yeah.
I am starting to believe more and more this market will continue to run until after the election. I think number one, you'll never get we're in a recession statement out of Biden administration, because they do. People quit spending, people tighten up, and then we really head downward.
I think people know we're in recession. I mean, just economically from an inflation point of view.
Yeah, I think just the average person just keeps going. And as long as they don't confirm certainty, then people just sort of drudge along like they usually do. But once they confirm certainty, then they stop spending, or they stop doing these things. So I don't know. I think I wouldn't be surprised if you see Nvidia at 1,000. I wouldn't be surprised if you see the Nasdaq and S&P at all-time highs, even more so. I mean, what's going to stop?
I don't disagree. I think a lot of technicians are saying, we're just on our way to a blow off top right now, and that this thing can keep going as long as people have money to throw in there and push it up. But trend's your friend, so it's not.
Yeah, I was going through my ETF tracker.
Yeah,
and it's just going through the individual positions that it's a list of 20 of the top 20, and if they have a score of 5, then they get a full allocation of 5%, which brings it to 100%. If you allocate the 20 to 5%, you get 100%. And going to the charts, they're all above the 200, above the 50, above the 20, and above the 9. They just keep going.
There isn't a week, a day that goes by that you watch one of the news channels and they say, oh, the S&P 500 was up, or the Dow Jones hit all-time highs. But in this next section, Mark sort of breaks down the 3 indexes, the Dow Jones, the S&P 500, and the Nasdaq, and we look at the charts, and when we look at them, maybe they're hyping it a little heavy at the old CNBC or Fox News or whoever else does reporting on financial channels. Maybe it's not all that much.
So here's the S&P 500, the SPY. And again, here we are. We're just humming right along the resistance level. We popped up a little bit today, but a sideways pattern. And we've had this has been going on for a while. We'll back it out 6 months. If my slow computer, there we go. You see, we just kind of been stair stepping up, and then we go into a consolidation phase, which I'm going to talk about. And normally, when you're in a consolidation phase, you're ready to break out at some point, either up or down. And lately it's just been up. Let's go back and let's just spread it out a little bit further here. Hopefully so here it is, kind of looking at it in a bigger sense. And what I see and a lot of other people see is a rising wedge. And, rising wedge is where you start out wide and you just keep going between the channels until you end up squeezing out one way or the other. So we're coming to a decision point at some point from a technical standpoint, at least on the S&P. Dow Jones is pretty much similar too. We've come up, we've hit the intermediate resistance level. We still have, an upward Bollinger Band going up, just moving up slow, but nothing dramatic like, you see it on CNBC, like, oh, the markets are way up today. And I go look at my chart and I'm like, well, they're up, but it's not like it's huge at this point. Again, here's our stair step again on the Dow stair step, and I should include a upward channel here and then a sideways stair step again in the Dow. I didn't put the lines in, but if you look at the lines, you would see we're probably moving in the same general direction into a upward wedge. But again, this is astronomical. What we've been seeing in these markets since the end of October. It's just a few breaks down, but not much to look at. And at some point, you got to ask yourself, is it going to run out, or how long can it run? And I can't tell you that. A lot of technicians will say, look, we're in the middle of a topping pattern where we top and then you see it fall, but until you see the momentum switch around, you can't say that. Let's go over to the Qs, and here's NASDAQ again. It came up, pretty much is bouncing around resistance, and today it came up and it went through where the sell orders were today, and we're up 1.37%. But again, you go look at the Qs and the top 5 or 7 stocks in the 100, the Qs with the 100 stocks, are half the market cap and half of this index. So if they go up, the index goes up. It's not representative of the entire index. Let's go take a look at the 1 year here.
Those last 6 or 7 candlesticks, that bump up was on NVIDIA's earnings day.
Yeah, you're right. Yep.
Mm.
And NVIDIA is a huge part of that. And if you look at, the chart from a distance, step back and look at it, at 30,000 feet, you're seeing the same kind of a wedge pattern. So how much longer can it go? We can bounce up here. We can come back down. We can bounce up here. From a technical standpoint, at some point it's going to break trend, and whether it's up or down, I don't know, at this point. But again, interesting thing about charts.
Bitcoin went over $64,000 this week. Remember when it was $15,000 like 6 months ago? It's been on a wild ride. It's been on a major move. It is one of the most volatile assets. Well, one of the companies that has been buying from the beginning Bitcoin is MicroStrategies. And Mark breaks down the chart on MicroStrategies this week in this vertical move that we've seen in MicroStrategies. Mark also explains the 5% above the Bollinger Band rule and how to interpret that as well.
Yeah, here's MicroStrategy, and this is what Bob was talking about. So MicroStrategy's gone right up. Today it's hitting all its cells right here, and that's where it stopped. But it came down, never did really get too far below the 9, popped back up, got some gap on the outside of the upper Bollinger Band. Only does that 5% of the time on average. Let's take a look at.
Hey, Mark, let me ask you a question about that statement. 5% above the upper Bollinger Band, is it the same with below the Bollinger Band?
Yep.
So
you'll see these pull in. I mean, look here, this road above it, and normally doesn't go more than 5 days on average before it'll pull over. But when I see, I don't like to buy. I don't care what the pattern is when it's above the Bollinger Band, just from a risk reward relationship, because this can happen here.
Yeah.
And same thing kind of happened at Berkshire. We'll look at that here in a second. But you can see here's MicroStrategy, and this is when Bitcoin started taking off, because this follows Bitcoin. You can see what happened here.
Yeah.
So gap. So a lot of gaps here. Here's the volume. Look how the volume just went off the roof here too.
So we covered a lot this week in this week's video. I know it's a little lengthy, but I believe there's a lot of value there. We talked about the evolution of businesses and how they will be able to bring together data and mine it right and create better, efficient, value-oriented opportunities. We talked about crypto and Bitcoin and the move in it. We talked about the indexes and how it looks like they're starting to go sideways again, setting up for, well, another move higher or a move lower. We also talked about maybe this is just a continuation of the bull market until it's not, and not to fight it. There's a lot going on in our world, geopolitically, macroeconomically, stock market wise, and for you not to be paying attention is crazy. And if you're seeing this part of the video, I suspect you're paying attention, you're interested. And that's why joining the Platinum channel at our 50% discount, which you can get the link in the discount code below, and joining our channel and learning more. We're adding more every week, every day. We're going to add more educational videos on how to invest, how to read charts, how to read markets. We're going to talk more and more and in depth about creating wealth, and but most importantly, preserving it. So join the Best of US tribe, join the Platinum channel, get the 50% off the $60 monthly subscription for 3 months, and join the tribe. God, I can't say any more about it. Just get on it, buddy. All right, peace, live loud, and have a great week.